Wednesday, January 21st, 2026, Maneco 64, home of alternative economics and contrarian views. Well, gold and silver have certainly continued to do really well. Overnight, gold traded up to almost 4,900 and silver traded up to 95.58. So what I want to talk about today is when am I gonna sell my gold and silver, right? I'm sure a lot of you are thinking of that. A lot of you want to ask me that question. And my answer will be a little unexpected, I think, or maybe not. And why do I say that? Well, I mentioned someone yesterday in my video, Ray Dalio. He's a billionaire hedge fund manager, and he is in Davos in Switzerland. And he made some really interesting comments. So, and I looked a little deeper into his comments, and I think I agree 100% with him. It's almost as if he's been watching the channel for the last 10 years. Anyway, before I proceed, just wanted to say I'm not feeling really well at all. I've had a really bad stomach virus over the last 24 hours. I've gotten better. So I'm going to keep this hopefully short. And then I'm going to go and rest and take a lot of fluids and liquids. And yeah, it happens. It's unfortunate. But anyway, yes, the bond markets are a signal that things aren't well. We saw yesterday the Japanese government bond market kind of crash majorly, the longer end of the curve. This morning, though, overnight, it has rebounded kind of a bit, but I think it's just what we call in the business a dead cat bounce. It's not going to get better. And why do I say that? Well, I listened to Ray Dalio's interview with CNBC at Davos. This is what he said.
Let's step back from the sensational and be clear about what I mean. The monetary order is breaking down. Okay. What I mean by the monetary order is that fiat currencies and debt as a storehold of wealth is not being held by central banks in the same way, and that there was a change. The biggest market to move last year was the gold market, far better than the tech markets, right, and so on. And the U.S. markets underperformed foreign markets because of the fact you could see it in the numbers of the central banks and so on. So let's just look at the fact that on the other side of trade deficits and trade wars, there are capital and capital wars. And so as we're looking at that, and you reported what the stock market and so on, but you didn't report that the gold market is also up 3.
We did say that earlier this morning. Okay. It's up to record levels again, and silver.
Is you look at what is happening and why it's happening and who's buying it. So let's just take a moment on that capital war issue, okay? We know that both the holders of U.S. dollar denominated debt, which is money, and those who need it, the United States, are worried about each other, right? Mm-hmm. So if you have other countries who are holding it and they're worried about each other, and we're producing a lot of it, that's a big issue, right? So you have to explain what is going on with fiat currencies, generally speaking. And now if you take the conflicts, you can't ignore the possibility that capital wars, in other words, maybe there's not the same inclination to buy U.S. debt and so on. We at least need to talk about those possibilities and find out who is buying and selling what that is behind these market movements.
That, to me, was very significant, especially coming from a Wall Street hedge fund billionaire, right? He says the monetary order is breaking down. Fiat currencies and debt, i.e. government debt, right? I've always told you that the flip side of fiat currency is the debt, right? That's how they create the currency. The flip side of gold, there is no flip side of gold, right? Gold is money, silver is money, there's no debt. And that's why it works. The reason why it didn't work in the past like a gold standard is that they lent too much, they made too many promises on not enough gold and silver. It's always the banker's fault. So what they decided to do is just to take out the gold and silver completely and just keep issuing these non-redeemable debts, right? Because that's the whole problem with it. So he says fiat currencies and that as a storehold of wealth is not being held by central banks in the same way. And he went on to say the biggest market to move last year was the gold market. Yeah, it was up 65%. I think the NASDAQ was up 20 or something. So the message, this is the way Ray Dalio is thinking. So what I'm trying to tell you here is that we are on the Titanic right now. That's the analogy. And if you have gold and silver, you've got the you've got safety, right? You've got the lifeboat. The gold lifeboat is a little bit more luxurious. The silver is a little bit plainer. So if you knew the Titanic was going to sink, right, would you get rid of the lifeboats? I wouldn't. Of course, I'm sure many people that were on the Titanic didn't think it could sink, right? And they couldn't care less about a lifeboat, a gold or silver lifeboat, or a lifeboat for that matter. And the other thing as well that we've learned is that there weren't enough lifeboats for everyone on the Titanic. It was supposed to be unsinkable, right? So the question I asked earlier in this video was, at what price am I going to sell my gold and silver? So I think you've got the idea right now. I'm not going to sell it. And in future, what gold and silver are going to be, like Ray Dalio said, it's going to be the ultimate storeholder value. It's not going to be fiat currency anymore, or fiat debt, treasuries or bonds or JGBs or gilts. It's going to be gold and silver. So there will be a brave new world, if you want to call it, where you exchange your gold for other assets at a certain ratio, and that will be the price, right? I'll give you an ounce of gold for, I don't know, 10 acres of land in somewhere, right? Or I'll give you an ounce of silver for 2 dozen eggs. I don't know, that's what it's going to be like. And you might think, oh, but we're used to the prices in fiat dollars. Well, I can tell you, having grown up in a place like Brazil where the currency changed so much, where the currency collapsed and you actually use the dollar really as a storeholder value there, you get used very quickly to valuing things in different currencies. And that's the world we're going into. Of course, for people who are totally oblivious to the fact that the Titanic, the monetary Titanic, is sinking, well, they're going to stay in the Titanic. They're going to go into the casino in the Titanic. I don't know if they had one. And they're going to keep gambling in the casino. They're going to keep buying gold futures, doing options, and so on and so forth. And yeah, for them, I hope they have a little bit of physical on the side. And Ray Dalio actually said that in the neutral portfolio, you should have 15 to 20% gold, neutral. So He didn't say, I think, how much he has of gold, but he basically said he's got half gold, half tech ventures. That's all he has, it seems. So what else is going on? I did tell you I'm going to keep it short. Well, we had some UK CPI numbers. They call it inflation, of course. It's more like prices. UK CPI came out at 3.4%. So it's risen from 3.2%. So if you look at the UK gilt yield, the base rate in the UK is 3.75. So you're getting nothing really for your money if you put it on deposit, your fiat currency. We've got financial repression. Basically, they are taxing you through inflation, and that 3.4 number is more like 5%, I would say. I did a video back in July of 2022 about how the Office of National Statistics in the UK, they flagrantly switched the history of CPI going back to post-World War II. And basically they made it look like 1% less. So have a look at that. So that's why I'm saying 3.4 is more like 4.4 or even 5. I wouldn't be surprised. And there's another measure of price in the UK that used to be follow when they had to change it to make it look smaller or not as big, the increase. And they still publish it. It's called the RPI. And that came out at 4.2%. So is it any wonder that gold and silver keep going up? Because the smart money, like Mr. Dalio, they've realized that fiat currency and the debt that backs it are not a good storeholder value anymore. And that the monetary order is breaking down, and he notes that the biggest buyers were the central banks last year, and they're going to continue to buy this year. They started buying aggressively in 2022. They did it in 23, 24, 25, and they're going to continue forward until they have probably more than 60 or 70% of their reserves in gold. I saw that Poland announced yesterday or the day before they're going to increase their gold reserves by 150 tons from 550 to 700. So there you go. That's why I've always said, hold on to your gold and silver for dear life. There will be no savior, I guess, for fiat currency, but you can try to save yourself financially with gold and silver. So there you go. One thing I noted today, and actually right now, gold is at 4,862, up $100, and the Dow's at 4,859. So we're testing that 10-to-1 ratio. We've broken below it. That's another good indicator for you to keep an eye on. Just divide the Dow by the price of gold. If it keeps dropping below 10, that's another sign. So with that, I'm going to wish you all a very good day and take care. Bye.